What is good, Tesla family? It's Ray J back with another video. And in this one, I'm going to be talking about Tesla and break down some very important events coming out for the week that will affect how Tesla moves. I'm going to talk about SPY as well and break down why on earth this week is going to be massive and how it could affect Tesla and SPY moving forward. And before I break anything down about all this information, before I talk about the levels to watch for on Tesla, which are more major than the ones I typically talk about, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And finally, don't forget about the Moomoo link. The offer ends very soon. Put in $100 and you're guaranteed 5 free stocks with a $100 cash reward. The offer also ends very soon, so check it out before they run out. With that out of the way, let's get on with the video. All right, guys. So anyways, when it comes to Tesla, this thing has these very tight ranges, which I tend to talk about on a day-to-day basis. But these are very tight, and these have more to do with like scalping, day trading, and so on and so forth. But when it comes to swing trading, much larger moves and looking at supply and demand, there are bigger levels I want to talk about and look at, such as us getting all the way up to like the 300s. I have about $100 worth of price action on Tesla right here, so it's much larger. I'm going to talk about some important levels on Tesla and why on earth Tesla is going to make a very big move very soon. We're either going to see Tesla start shooting up to many of these levels, or we're going to see Tesla get a big rug pull and start coming down to some important support zones. Now, why on earth is that? What's going on in the markets? Well, first I'm going to talk about SPY and just break down a couple of things real quick. This may just take me a couple of minutes, but just so you guys know, we have a crazy week next week. Okay? We have consumer inflationary expectations for Monday. For Tuesday, we have CPI coming out. That's going to be huge. For Wednesday, we have the PPI report coming out. That's also going to be very, very major. And all of these things will affect the Fed's policies because on that same Wednesday, we have the FOMC meeting, and then we have the interest rate hike decision from the Fed. All of this is super, super important. The meeting is going to come at 11:30 a.m. Pacific time or 2:30 p.m. Eastern time. That's going to be huge for the markets. This will affect the Fed's monetary policy, and they're going to be looking at the inflationary numbers. So far, looking at the unemployment numbers, they've been showing weakening in the economy, weakening in the jobs market, and this is just what the Fed wants. The jobs numbers have been incentivizing the Fed to pause, but the Fed needs a final confirmation from the CPI and other inflationary numbers like the PPI report. If the Fed gets low CPI, low PPI numbers, which are either as expected or lower than expected, and we're continuing to see a trend that is declining according to the data at least, the Fed is going to be inclined to pausing. Okay? The Fed is going to want to pause. They're going to be incentivized to do so, and we'll see if they do it. But if CPI and PPI are hot between Tuesday and Wednesday, if they're too hot, they show a big increase, the Fed is likely going to give us another rate hike. Now, I don't know for sure how they're going to go about it, but it's very likely that they're going to make some big announcements about like the future moving forward and the way at which they are going to be collecting their data. But what the Fed does is going to have a huge effect on the markets, which I will talk about in just a couple of minutes. Now, right now, the market's expecting the Fed to pause. There's a 71% chance the Fed is going to pause during this next meeting, but it's not 100%, nor is it 100% guaranteed. The market wants it to happen, and the market's going to rip if it truly does happen. Even from these high levels we're at, the market's going to explode if the Fed pauses. But if the Fed ends up doing something different, if the Fed ends up giving us a surprise rate hike, the market is going to tank. And the entire market, even Tesla, is going to get dragged down. There's only a 28% chance of that happening according to the market for now, but we'll have to wait and see. Now, looking at other data, let me just add that we can look at Tesla from a different perspective. So let me just pull up Tesla right here. The way in which the market moves tends to be very similar amongst different stocks, especially in the current markets. This is Tesla next to SPY. Look at these similar fluctuations, right? They pumped together during different stages. They came down together. SPY started bouncing back around the end of the year, but Elon Musk was selling shares, so Tesla continued to fall and really underperform at this time frame. This is why the price-price ratio came down the way it did. And then what happened was they came up together, down together, up together, down together. Now they're pushing up together. See how similar they are? And then compare SPY to Tesla to the QQQ, right? QQQ pumps, Tesla pumps. QQQ comes down. Tesla came down with it. Tesla was dictating it to some degree, but overall, it's not just that. It's also the NASDAQ. They pump together, they come down together, they pump together, they started coming down similarly. We saw the QQQ outperforming Tesla a little bit during some of these early months. Tesla had some bad data coming out, at least from their margins because of earnings. So Tesla started underperforming just for a little bit longer before they both started pushing together. Tesla also pushed it up a bit, but you could see how similar the market tends to move, how similar these algos tend to be. Why am I talking about this? Because you have to look at these levels, okay? If the Fed pauses, okay, I have some major supply zones on SPY right here. I don't have the demand zone. I forgot to put that there, but it's okay. It doesn't matter. You guys get the point, okay? If the Fed says we're going to be pausing using their open market operations, typically what happens is the market rallies after the pause. If you don't believe me, I could show you 2008. Not 2008, but in 2006, the Fed paused for an extended period of time and the market started to rip. It's going to take me a minute to go all the way back there, but I have the chart right here. So I have two lines right here. We have a Fed pause and a rate hike. Let me just get all the way back down to these levels. Give me just 1 second, guys. But anyways, so the first line to the left, the vertical line you see, this is when the Fed paused, right? The Fed paused on the rate hikes. The market started to rip up. But then things started breaking. Let me just zoom into this. Give me 1 second. Sorry about that. Things started breaking the economy, right? And when things started breaking, basically the market started tanking. And then the Fed right here, where the second blue line is, this is when the Fed cut rates. So a lot of people make a mistake. They keep saying when the Fed pivots, the market crashes. That's not true. Correlation does not mean causation. You always have to remember that. The current economic environment with a credit crunch events, with some economic hardships that hurts the entire market collectively as a whole, caused the market to come down. And then that caused the Fed to pause and then eventually start to cut rates, to pivot. The Fed responded to the hardships, which caused the market to already start dropping. The market was already dropping, then the Fed cut. Why? Because the economy was starting to break, basically. The same thing could happen again in the future, but so far there isn't really a sign of it for the time being because so many people are shorting the markets. But I don't want to talk about the Fed like cutting rates just yet. They don't plan on doing it for a long time. The bonds market is betting that the Fed is going to do it near the end of the year, meaning they could be suspecting things may break or some other thing that could cause the Fed to start cutting rates by around like September or October time, the last time I checked. But the Fed is saying, alongside many of these Fed speakers, that there's going to be a copious amount of time until they end up doing it, even longer than that. It may not happen until 2024 in their eyes. So the Fed is saying something different from the bonds market. Typically, the bonds market is correct, but why would the Fed pause sooner? Could it be that something bad is going to happen? Who knows? But here's the thing about that. People talk about how, the crash is possible, this and that. Yes, they could be right. Maybe there is a crash coming. But what catalyst is there to crash the markets to new lows? I'm not seeing it right now. The market doesn't see it. And I'm saying this because of the market's perspective. The market has a very different perspective. On top of that, maybe it could come in the future. Yes, it can. But why talk about new lows, like I've said before, when we are well above major levels on the market? SPY is nowhere near 340. The lows we made in October were nowhere near that. SPX is nowhere near it. Nor is Tesla near 100. It's way above that. So why talk about new lows right now? We have to wait for confirmation and the catalysts to be safe. And here's another reason why I'm saying this. Why is the market so strong? Why is the market pumping? Look at how the market's been pumping for the last couple of weeks. Why is this happening? Why does the market keep pumping? There's one main reason, or there are many reasons, of course. We are getting possibly closer to a Fed pause. But another reason is the options chain on SPY. I mean, I talk about this almost every week. When everyone is shorting the markets, everyone's betting the market's going to crash. Are they going to give us a victory and crash the markets and help retail win? I don't think so. The odds greatly go against that. But it's not a guarantee because if there's a big enough catalyst, like if something big were to happen, something really, really bad happens, I don't really want to say it specifically like a war or, another virus or something, those sorts of things. If something bad happens, yes, the market could unexpectedly get a big crash. It's still possible. but you need a catalyst that's big enough to cause it. And for now, in the eyes of the markets, we don't have it just yet. And we don't know the exact severity of the recession we're entering. So I can't say for sure whether or not it's going to happen. That's why I stress the importance of confirmation and just looking at levels on this channel, because it's very hard to predict what's going to happen in 6 months, in 5 months. You know, that's why I keep talking about this. But anyways, now I want to break down the reaction of the market to the Fed, because don't forget, on Wednesday, right over here, the Fed has the FOMC meeting. I'm going to talk about SPY, then Tesla in a lot more details. So just so we're clear, if the Fed announces that inflation's coming down, we're going to skip the rate hike, we're going to pause, historically the market tends to pump initially. So we're likely going to start making our way up to this next major resistance. If SPY manages to hold above 430, or at least we're around these levels, and the Fed announces a pause, it needs to happen because of a low or decent CPI. If we get that, SPY is going to fly all the way up to 440 to 442. SPX is going to reach the 4400s, right? And if that breaks, if that somehow manages to break and we just continue to rip, we're going to be on our way to 450. If we break this huge resistance, it's tough. It's not going to be easy, but it's possible, right? You may think I'm crazy for saying that, but look at how much the market's been pumping, right? A lot of people did not expect us to break this high all the way up above 430, and it's still happening. We're still starting to see shorts get squeezed. I would not rule this possibility out, and I would say I would greatly favor this if the Fed pauses. All right, we're most likely going to see this. It's very likely. If the Fed doesn't pause, if the Fed says, "Oh yeah, we're going to give you guys another rate hike," the stock market's going to come down pretty hard. We're going to get a big rug pull again, and SPY is going to come down to 420, even lower than that, into like the lower, like 410s, if not lower. It's going to be pretty bad if the Fed gives us another rate hike, because many people would question if the banks could handle this again. Now, with the whole banking situation, as many big economists and analysts have said, there's no guarantee the banking situation is just like dealt with or completely over. And there could be more failures to come in the future. But that is yet to be determined, and we shouldn't just bet on it just yet until we get the actual news. That's why you have to be very, very open-minded and careful in these markets. But anyways, looking at SPY, let me just note, don't forget, there could be a big move to the upside or a big move to the downside coming next week, depending on the Fed's policies. So that's going to be huge. But there's a reason why I'm talking about this in context with Tesla. Remember what I told you, okay? For the people who are new, the market moves very similarly. SPX, the NASDAQ, the QQQ, these different ETFs, other consumer discretionaries out there, the EVs, they tend to move very similarly in different sectors, or even like in the broad general way in which things move. So what this means is, if the Fed pauses and the whole market is going to get it like an everything squeeze, who is going to be affected by this? The answer is Tesla is going to be impacted big time. Tesla is also going to dictate the market to some degree at the same time too. Just look at how it moves so similar to that of the QQQ as it dictates it. Look how similar it tends to be with SPY, right? Look how similar they tend to move. There are some instances where Tesla underperformed, of course, because of like external factors such as fundamentals and Elon Musk selling, but for the most part, they're very, very similar. Look at the last like couple of months, right? They pumped together, they came down together, pumped, came down, pumped together. Now, anyways, that's going to make me transition into Tesla. What is Tesla going to do if we get some very, very good news? Well, it's very hard to predict exactly how this is going to go, but I want to talk about some of the major levels. Now, these are not the mini levels, the smaller levels when it comes to trading this on a daily basis. This is more like for like swinging and looking at the much bigger time frames. And let me close this. I don't know why I kept this open the whole time. I think I messed up there, but it's okay. All right, anyways. So for Tesla, this is our Tesla chart. If Tesla gets a very positive reaction with the whole market after we get a rate hike, a rate pause. The Fed pauses on the rate hikes, hypothetically, and there are no other external factors to hurt Tesla, such as like the news or fundamentals, nothing too major happens. There's a high probability Tesla's going to push all the way up above 250, 256, then 265, and then potentially 275 even. And I don't know if it's going to break 275 all the way up there like that fast. It may take a little longer because we do have some major resistance in this zone, but there's not a whole lot of resistance after that if it does get a breakout. And remember, we have earnings coming up in a couple of months, so we have quite a bit of time. If it's insanely bullish, if Tesla explodes, which it most definitely still can, the high we saw today in the pre-market, and I'm recording this on Friday night, by the way, guys, but we were only $25 away from 275. It might pump that high, if not even higher. I mean, if it breaks that, we could go all the way up to 290 to 300. It's a possibility, but I'm not going to count on that just yet. We have to watch for confirmation based off CPI and also based off PPI and what the Fed ends up doing. But don't worry about like 300 until we break these other levels, like 265, 275, and etc. That's going to matter first. It could even break higher, just saying these are levels to watch for. But it could make a massive move to the upside next week, start uptrending, and then over the next few weeks start pushing up and up and up and up into these higher levels. It could start doing that. It's going to start doing that if we get the Fed pause and there are no massive external factors such as the news or bad pieces of news to hurt Tesla. That's going to be a big catalyst for Tesla, and it's going to be very glorious to witness, in my opinion. Now, what if the Fed ends up raising rates again? What if they rug pull the markets? Well, unfortunately, we're going to get an everything rug pull basically. Nvidia is going to come down, Apple's going to come down if the Fed gives us another rate hike, and then Tesla's going to come all the way down, not just to fill this gap, but it's going to drop even lower, start filling some of these gaps to the downside, and make its way closer to this next level. 226 to 220 could come, and then it could drop even lower into more of these gap fills. 208 and possibly even get closer to 200. A big drop would come to Tesla alongside the whole market if we get a very hot CPI, like a really hot one that's much higher than expected, and then we get another Fed rate hike. So two big catalysts could cause a big rug pull. It's always a possibility, and we're going to have to watch for confirmation. I personally do not like to hold options over these big, events and dates because it could impact the market so much. And I think it's very important to be well aware of how big this can move the markets. Now, why am I also saying this? That's because CPI, for example, comes out before the market opens. So does PPI. And then, the Fed rate hike decision is going to come out after the market ends up, not after the market. After the market's open, it's going to be happening intraday. So I like to be careful during events like these and stay away from gambling. But I want you guys to know that there's a massive move coming, and the true power of the Fed is going to be on full display. They're either about to rug pull this rally and cause the market to tank, or they're going to cause this market to explode, which is going to help Tesla pump very hard as well. We're going to find out in the next couple of days. I hope you guys are ready. I hope you guys are prepared and you have your popcorn ready for all the fun that's about to happen. It's going to be a wild week. It's going to be very, very volatile. We have so much stuff coming between Tuesday and Friday. It's going to be wild. Please be ready. And this is going to dictate how Tesla moves for the next couple of weeks, in my opinion. Get ready. Do what you have to do. I wanted to inform you guys about this over the weekend. Thank you all so much for listening. Have an absolutely spectacular weekend and rest of the day. Tesla to the moon as the long term is very bright, and peace out.